Hello and welcome to Building Tomorrow's Insurer, the podcast where we cut through complexity and hopefully uncover how technology is driving insurance forward. And today, I'm your host, Nigel Fellowes-Freeman, and I could not be more excited to be joined by two folks who very much know the world of payments, and that's Ed Wiley and David Greene from Monoova. Guys, thank you so much for joining me today. We're going to be tackling, I think, maybe one of the industry's most overlooked problems, but when you actually break it down, it's getting paid is very, very important. So payments is one of the most important. I think you'll both agree it's important for insurers to maybe move beyond very clunky, outdated systems and move to a world in which real-time payments are actually doable, what it really means, and how you can build an ecosystem of partners that are really important for growth. And so, look, guys, thanks so much for joining me today. I'm really excited for this one.
Cool. Thanks for having us on, mate.
Pleasure, absolute pleasure. Ed, David, maybe can you guys first of all to give the kind of listeners a bit of a context, can maybe give like just 20 seconds on you and then kind of position Monoova so everyone kind of understands the landscape and where you're coming from.
Sure. So my name is Dave. I'm the Chief Commercial Officer here at Monoova. Bit of background about us. We're an automation payment platform, and our USP is really automating the account-to-account payments. So within Australia, we uniquely have probably the largest breadth of payment capability and access to payment rails. But specifically, we look at account-to-account, so BECS into NPP. Me personally, been in payments tragic, proud to say, or maybe not so. I've realised I've been in payments for nearly 20 years. And kind of my journey has been in the world of cross-border. I grew up in an operations department of a bank, but largely focused on cross-border, both overseas and then back in Australia. And then was an acqui-hire into PayPal, with a Canadian startup that did low value payments, and then jumped out of PayPal and into better startup world in buy now, pay later, and now into Monoova.
Awesome. Thanks, Dave. And how about yourself, Ed?
Well, it's hard to back that one up. So Ed Wiley. So I look after Monoova for platforms and partnerships. And kind of my payments journey is similar to Dave, 10 years in international payments on the FX side. And then I decided to kind of flip the switch and focus a bit more on domestic payments with Monoova. And yeah, it's been a blast, and really my core capabilities throughout my life in payments has been focused on platforms and partnerships and trying to kind of merge multiple systems together and try to find kind of synergies. So really excited about what we could do in the insurance space. It's a really interesting space and a lot of technology that's been stuck in the ancient times, and it's slowly everyone is moving towards how do we move this to the cloud, and on those journeys, payments usually comes up one of those topics, and that's where we kind of jump in.
Awesome. Thanks, Ed. Thanks so much. Maybe that's a really nice place to start. I think often payments, like I mentioned in the kind of intro there, payments is kind of forgotten, but is very, very important. And to frame up the conversation, it would be great to understand, with you both being in payments, in payments really for such a long time, it would be great to understand maybe a state of play. And like, what does the land of payments look like today in terms of what's available, what's not? And you mentioned they're kind of being stuck. Can you kind of describe what that actually means? Like, give us a scope of the landscape.
I think everyone sees the really awesome payments in their day-to-day lives, because you got to peel everything back to everyone that you deal with in the insurance industry is kind of a human being. So they have seen Apple Pay, Google Pay. However, a lot of insurance products are kind of really stuck in the 90s with the standard payment options, and a lot of that is due to, set and forget. So it was set up by someone who's probably left the business or is still with the business, and they moved on to another task, and it's so embedded into an old system. So to build a business case to update it is kind of it's the first challenge. Now that everyone's moving off the on-prem systems to kind of more capable, more scalable solutions, it allows people to be a bit more agile and turn on those really cool, unique features like Google and Apple Pay, and put cards alongside, new payments platform with the NPP, PayID to help reconcile and allocate those funds accordingly. Because I think the biggest pain point that we as payments people come into when you're talking to the insurance industry, it's like, oh well, that project to change is so big because like it was so integrated into a platform. We just put it in the too hard basket. So that's the number one challenge. The technology itself and all the bells and whistles are here. So when you talk to people in the insurance industry, it's typically they always ask us the question, or kind of, you're on a panel and the question usually comes, oh, what's the future payments look like? And they're always looking for kind of into the future. It's like, well, actually the future is here. All the cool stuff you want is like available today. It's just turning it on and kind of building that business case to kind of get that going.
Can I just jump in there a second? So just to break that really, I think this pod generally does do well because I am reasonably naive and ask super questions. And so in terms of thinking about super questions, you've spoken a bunch there around payments today. And so when you say the cool new features like an Apple Pay or a Google Pay or those kind of abilities to pay that way, are you saying that therefore generally in insurance business today, whether you go onto an online site, etc., and the way to pay has maybe BPay, or maybe it has a third-party link that you go off to and have to do a payment or get a payment link, etc. Can you just talk me through that, just real terms? What does that actually look like today, so we can get just a scope of how it feels?
Okay, so the first kind of core is converting the customer. I think a lot of insurance businesses look at payments as someone who's wanting to do our insurance will just use the payment options available, and that's fine. However, if you look at the e-commerce industry, it's always about conversion optimization and making sure that you offer enough payment types that is comfortable with the consumer or the business at the checkout.
Yep.
The insurance industry sometimes, is a bit lazy in nature because they're focusing so much on getting people ads to sign up and going through the process of adding all the information. And once they get that quote, that's not where it starts and stops. Where it stops is usually when you've collected those bank account details for a direct debit or a PayTo payment, or you've collected, those card details. So if you can add that streamlining process of kind of Google Apple Pay to, have your card details already saved, or PayTo where it kind of gives you the consent to pull the funds in a real-time payment, that's where you can convert, a high percentage of your, because you're costing a lot of money to get those people to your page. So getting people into the funnel is critical, but actually getting them to complete that checkout. So taking a page out of the e-commerce book where they focus heavily on conversion optimization is probably the first step for insurance companies when they look at payments. And then post that is actually how they reconcile the funds. So if someone does opt to kind of push money in via bank transfer, or as you said, BPay is old, clunky and expensive.
Sure is.
So there's new ways of looking at that with the likes of PayID. PayID is equivalent of BPay. It has a unique reference number in the PayID. You can lock it down to your insurance company. And the benefits of PayID versus BPay is that the funds settle instantaneously. So you don't have to wait T+1 day for the funds to settle. but also, you have the capability to do refunds. BPay refund is absolute nightmare, and it's 4 times cheaper. So BPay is expensive. So there's like quick little wins there, and that's kind of just getting your initial premium payment. Is kind of the first step off the rank in the world of payments. Dave, did you have any?
Hey, can I put you in there on the commercial aspect of this, which is obviously whenever I speak to insurance execs, the new payments and stuff they want to look at. One thing they care a lot about is how much it costs, which is how much is it going to cost them, how much is it going to cost the customer, what's the kind of percentages there, and how does it get shared between customer and vendor and the gateway themselves. And so, can you talk to me a little bit about that to bring the state of play of where do those percentages come from? Why are some vendors like expensive, like 2% ish, and some down at 0.2, 0.3, etc.? Can you give me a sense of how this landscape looks from a like a commercial perspective?
Let me take that one in. So, I mean, payments, they're really they're disparate, right? There's a lot of mechanisms to be able to move money around, but if you boil it down, really, you can move money using kind of from a card, right? So, or you can move money from one bank account to another bank account. And there's a lot of fanciness around both of those, but when it boils down to, it's like it's initiated from a card or it's initiated from someone else, from a bank account. The card rails, they attract an ad valorem or a percentage-based fee, right? And so then there's a lot of complexity and opaqueness around the makeup of that fee. But it kind of comes from, there's interchange of one fee component that's set in Australia. It's regulated by the RBA. And so that gives some kind of consistency to cost. And then the other part is there's the scheme fee. So if it's a Visa or MasterCard or American Express, or even the domestic scheme, so FPOS commonly referred to it as, and so that attracts a scheme fee, and then there's the PSP or payment acquirer charges on top of that, and so, but that has a fair gamut depending on if it's a credit card or if it's a debit card, if it's an international card or if it's a domestic card, if it's a premium platinum card and you get all these fancy points. Or if it's just the run of the mill, and so that level of opaqueness or the cost can then range from, as you said, Nigel, 0.3% to 2%, 3%. If there's a BNPL in there, it's probably north of 4%. So there's a huge gamut, right? If you start to introduce wallets, that also introduces a higher fee because there's some special sauce that the wallets provide, and that's all around customer experience or consumer experience as well as merchant experience. On the flip side, though, the other thing not to forget is also the transaction fee for moving the money, and so that's sort of where it's kind of card based, and then where it's account to account, it's typically a flat fee. So it's a per transaction, cents per transaction fee. What's happened though from an innovation perspective over the last couple of years within Australia is there's been a lot of investment into the new payment platform or MPP. And so what that has afforded is that what the new payment platform does is it allows money to move from one bank account, say my bank account, to your bank account, Nigel, instantly. So I think within a couple of seconds, right? And that's amazing because it used to, I'm showing my age here, but when I was younger, it was at least overnight, right? And so, we're in a world which is, largely digital, we all mostly interact. And as Ed was saying, I think with insurance, a lot of, certainly on the retail books, they interact with insurers, consumers, retail customers interact with insurers, typically from a website, right? And so, but you sort of have the mechanism of instant gratification. So I can click on a premium and I can transact and get it straight away, or get that policy straight away. You've only ever been able to activate that using a card, but that attracts a higher cost depending on the value of the transaction. But with an instant movement of bank account transaction, you can also start to introduce that kind of instant gratification and digitization of the payment journey, but at a lower cost, at a lower price. And so, we're now starting to see use cases pop up in all sorts of verticals, which are really trying to integrate and introduce a different type of payment mechanism. It has the benefit of still being able to provide the consumer or the buyer with a good experience, i.e., I click on something and I can get it straight away. But with the added benefit of the merchant being able to receive the money or complete a transaction in real time. So there's those sort of idiosyncrasies between the two.
Makes so much sense. I just at the weekend, I bought something off Marketplace, arrived to someone's house. They put their mobile number in. I paid for it while I was on the doorstep, walked away, and they kind of, before I walked away, they confirmed the money's in their account.
Totally.
So that kind of thing, exactly what you're saying, but taking that into an e-commerce world. I'm sure everyone listening has seen how that works when they send some money to their friend through their kind of phone number. Exactly the same rails you can adopt when you're making payments. That makes so much sense.
100%. And so the other thing as well, though, like e-commerce is amazing for consumers. For you and I buying, whatever it is, like a pen online or a new set of AirPods or whatever it is. But if you're a business, the transaction values, the average transaction values are typically much, much higher. And so if you introduce a percentage-based like commercial model in terms of transaction costs, and that's what everyone gets frustrated when you go to the cafe and I'm paying, there's a coffee which is $5, but it costs me $5.10. It's a surge, and that surcharge changes depending on how much you buy at that cafe, or what your insurance premium is, or any of that sort of stuff. And so, where businesses are concerned, where the businesses are in the middle of that transaction, typically it's worse off for them because there's a really high surcharge, and so constantly looking at other ways to be able to negate a transaction fee or a transaction cost at both ends.
Totally. And putting on that thread just a little bit more, did I see in the news a month or so ago the government are looking at some of those fees that are charged today in terms of trying to bring some of the card side more in line with the kind of MPP approach? Is that, did I see something around that?
Yeah, I mean, there's a lot of media around it. It's certainly a political hot topic. I think, where cost of living and all that sort of stuff is a very hot political topic. But it's always on the mind, on the regulator's mind to make sure that things are fair and equitable and transparent. And so, some of there is still a cost to run the service, right? So think about it, if you buy something and you use your card and you're not happy with it, you can lodge a chargeback straight away. That's different. It's a different experience if you are moving money from my account to your account, like in your examples, Nigel, of buying something from Facebook Marketplace. You have no mechanism. If whatever it is you bought turns out to be fake or it breaks or whatever, you've got no mechanism to be able to dispute that transaction. So, there is still a requirement for, that type of protection or buyer protection or consumer protection where it's a retail transaction in play. But that's not every single transaction that happens in the country.
Yeah, makes so much sense. Ed, you mentioned a little earlier around the difficulty in business transformation around payments. Obviously, we see it on our business a little bit, which is why we don't play purely in the PAS play, because they get changed once every 10 years. And I imagine payments providers can maybe fit in a similar bucket. And so can you give a little bit of, if I'm a insurer sitting at home and I'm considering changing payment provider, what are the kind of things that I should be assessing? What should I be looking at, and to get the business case across the line with the leaders, which have a mindset of this is too hard. If it ain't broke, don't fix it, to actually this is going to be meaningful to the business. When you're kind of chatting to execs, etc., like how do you kind of start to articulate with them around how they should be thinking about things?
Yeah, good question. It was I can name off a lot.
Yeah, please do. Give us a list. What's the top five things?
The key one for me is comparing apples to apples. It's but also take into account all the hidden costs. So when you look at, direct debit as a great example, majority of insurers will have direct debit as their 1 to 2 options. So they'll have card and then they'll default back to direct debit as the alternative for premium collections that are kind of recurring monthly. And direct debit itself is a great solution for if you look at it just on a cost perspective, for per transaction cost, that is. However, you can roughly get direct debits, with the major banks, roughly between 10 cents and 30 cents per transaction, which is very cheap when you compare it to card. However, with direct debit, it takes T+2 to T+3 business days to settle, so there is a kind of cash flow issue. But also you don't have certainty if that direct debit is been successful or not. So on day 3, and that day 3 is not just normal calendar days, that could be hitting over a weekend or a public holiday, over Christmas or Easter long weekend, that could be over a week away. And if the payment fails, that triggers a lot of internal costs, because one, you have got a premium out there that you need to go collect money again for, but also the consumer might have got pinged an overdraft fee that they went into negative balance. During that time of you find out and the client finds out before you do. So they might call your customer service team to try to solve the solution. However, your customer service team have no idea what they're talking about, because on their system it says, yeah, we've debited the funds. So there's all these hidden costs that can add up, and even if you do try to reattempt the payment, that adds another potential week or 3 business days to try and get those funds back. So
got it. So that first point is MPP approach versus direct debit. They're not like for like. They're actually quite different. Direct debit has got a big time component and kind of refund component, whereas bank to bank direct debit, bank to bank approach in terms of MPP has all of those things built in. And so when you're comparing those two approaches, be very cognizant of actually what both mean.
100%.
Got it.
And the difference is direct debit is great, and Monoova, we do provide both services. So the direct debit as well as the PayTo solution. And the PayTo is the new kid on the block. It's the real fancy solution. It's slightly more expensive and not outrageously more expensive, but it's per transaction costs. So it's very cheap compared to card. But the major benefit is that you get the funds instantaneously. So pull the funds. If there's available funds in their account, you'll find out within about 2 to 3 seconds, and the funds will be available. So there's really cool initiatives like that that kind of you need to weigh up when you're comparing. But there's events in market that kind of push the transition from direct debit over to PayTo, like the deprecation of the BECS rails. So
interesting.
That is getting deprecated, or it's been announced that's being deprecated.
Sorry, just for a stupid question again. BECS?
So BECS, great question. Getting into the nitty gritty. BECS is what the direct debit is built on. So that's the payment rail that direct debit is built on, and that is getting deprecated in 2030. So
is that only in Australia is being deprecated?
That's correct. So in Australia, the BECS rail is core to Australian banking, and that's meant to be direct debited in 2030. So that gives pretty much all insurers, 4.5 years to figure out how to move off direct debit and onto alternatives like PayTo, or alongside card. And the way that insurers move is very slow. So
Start
you've
thinking
got
now.
to,
Start thinking now is the part to this question.
Yeah, and the way that we like to kind of play that back is like offer direct debit and slowly migrate that across. So you just offer direct debit and PayTo at the same time. So you offer every new client that joins. So you don't have to go back to your old clients all in one suite. Every new client, you just push them down the PayTo solution, and then the old ones, as their solutions expire or their kind of their policies expire, you move them on to the new payment options, and that's a migration. So it's trying to find those events that kind of are triggered, kind of the need to migrate. So that's a critical one, the direct debit piece. Another one is like trying to find a competitive advantage. Like in the insurance market, everyone has got a very similar product, and it's trying to like push on what you can push on when you're doing advertising. A great one is real-time payouts for those events, like your house burns down in a wildfire. You want to be able to send them an emergency payment, not the full like assessment payment, but just that quick emergency payment, so they can have some funds available to go into a hotel or access clothes because they don't have access to their house. That is critical, and being able to roll that out to the market and use it and play on that with the consumer and differentiate yourself, because the majority of insurers are still based on batch file payments, and to get approval to a payout it takes so many steps. Whereas if you can move to a real-time payout just for the initial $2,000 or however much they need for an emergency payment, that could be a differentiator, and it could win you a slice of the pie compared to a competitor. So there's really good opportunities like that.
It's interesting, isn't it? Because what you're saying there is interesting, which is insurance really is a promise. It's a promise to pay later, right? It's a promise when something goes wrong, you can then get the money that you need.
Have the right.
And kind of what we're talking about there is like a moment of delight at that point of promise, which is getting money quickly when the person that bought the policy wants it. And I'm sure if I was in that situation and Insurer kind of wired me some money to allow me to get the thing done I needed to, I'd be very hard pressed to change insurers for the rest of my days, right?
It creates customer loyalty for sure. Like in verticals where switching costs are relatively low because it's hyper competitive, we see the same in utilities. So it's all about creating a customer experience that is defensible, and creates loyalty. And so Ed's right. So we on the payouts piece, that's a great one. There's other ones where if someone overpayment or underpayment of a bill, you would not believe how often this happens, right? And it causes huge amounts of kind of indirect costs to the merchant because they've got a customer support team that has to field calls from someone because the bill hasn't been paid or the premium hasn't been paid or whatever it is, and it's actually because the customer got the amount wrong or they didn't put a reference on it, like any number of those things. But with NPP, we do this for our own clients. You can start to automate, right? Programmatically automate like how you manage and deal with an over or an underpayment to create an awesome customer experience. Those sort of things, and they are really differentiated in market. Like it sort of actually doesn't cost anything, right? So there are those types of examples. But maybe Nigel, I think your question earlier around like what does a good partner look like, or what's an insurers be thinking about in terms of in terms of kind of migrating away. Like if you're looking to build the business case, I mean the business case already exists and the investment needs to happen because the legacy payment system is being shut down, it's being deprecated. The BECS, so bulk exchange clearing system, is what it means. And so that's the direct debit and all of those BSB and account number, those types of transactions won't really, the direct entry is what they're called actually. So direct credit and direct debit. So they will no longer be available. And so everyone will have to merge across to the MPP. And so that's not a nice to have it or nice thing to do. It's a must do, right? It's just when you look to do that. And payments, it's so critical just to commerce, right? In general, it's sort of, I think, big institutions, aren't necessarily in favor of doing huge payment transformation projects a lot of the time. So where we see that it works really well is you identify a partner that, has commonality in terms of goals, or like commonality in terms of being able to, kind of meet the brief, right? Mm-hmm. But can also grow and scale across multiple use cases, right? So sort of the thesis being the best way to de-risk an event is to do baby steps rather than just one big step. It's easier for a board to sign off a small investment rather than a multi-million-dollar, multi-year project. And so that's where we've seen a lot of success, and a lot of our clients will, grow with us, right? Because the use cases that they want to switch on, they can do so over time, right? And so in a sense, like that's the best way. That's the best way to do it.
Yeah, that's awesome. Thanks, Dave. That's super helpful. And in terms of the kind of PayTo vendors in the ecosystem, is that growing? Is it pretty narrow right now? I imagine with this change, everyone's kind of thinking we want to get in here, and I'm sure the legacy folks are also maybe a little nervous around this. Can you give me a bit of a sense of if I was, again, going back to that insurer or underwriting agency that's looking at this and thinking, well, I need to go to market here and have a look and chat to some folks. Can you just give me a sense of, obviously without naming folks, but just a sense of how the payment world looks? Yeah.
I mean, the banks are always there. So, and then there are non-bank players like Monoova. We're seeing an increasing number of the global PSPs also, who, they're not domiciled, they're not, grown up in Australia, but like typically they're US or European based businesses, all looking for some way to provide that solution. Not very often though do they go straight to the source. They will go through someone like us, or potentially one of the big four, one of the big banks.
This is maybe a bit of a personal question. We're actually working with a partner at the moment who's in Australia and opening in New Zealand, and the world looks very different in New Zealand. I know everyone bundles them together, but I'm sure that payments looks different. So can you talk me through that? Like, how does, if we've got underwriting agency or insurers that work in multiple countries, do they need to be thinking about this differently or thinking about this the same?
Dave's got a big smile on his face because he knows I'm flying to New Zealand next week.
And you are a Kiwi, so yeah.
I think finding the right partner that's scalable. And one of the main things that always comes up is future-proof yourself. So when we typically talk to insurers, they just want to replace exactly what they've got today. So, match the legacy solution with, the future stuff. And it's funny because your first meeting, they'll be like, oh, I want that. And as Dave mentioned, it's like just one step at a time. You'll go all the way through those meetings and it'll come out as like, actually, we just want to replace what we've currently got. And then, stage 2 will add new stuff. And I think that's the same with, international expansion, being able to cover most markets, Australia, New Zealand. New Zealand market's really interesting right now because they are just launching their equivalent of PayTo, which is called open banking. And that's meant to come into law in December this year. So it's kind of a good time for us to, look at that market as well. But, you want a provider that is, growing and constantly adding, new rails as they become available. So I'm proud at Monoova because I've come from a world where, getting a new payment rail or currency or anything added took, you always looked at the roadmap and you're just like, oh, it's just so far away, and you get on seeing the ship keep on sailing. Whereas Monoova, it's like every time, something new comes out, we're usually the first provider to launch that product. And with PayTo, as Dave said, we're processing over 50% of all PayTo payments in Australia. So it's kind of being first to market with the new, but also supporting the legacy solutions, which is the critical piece, because those legacy is what kind of you need to replace and run alongside. So having one vendor, all via API, taking those old batch files and presenting out as one API is probably the critical one that I see.
Awesome. Thanks for that, mate. And you spoke about the art of the possible a little bit there around not just supporting what's today, but what's coming, and often the wish list. And we've actually managed to get through 36 minutes of this pod without talking AI, which I think may be a record for me in the last 12 months. So is AI in payments? I'm speaking a little naively here. What's happening? Is it going on? Is it been happening forever? Is anything anything new in the last 2 or 3 years? Dave, maybe you've got a view on this.
I mean, yes, 100%. It's happening in payments, but it's probably when I say it's happening in payments, it's not that new payment rails are coming up and they're all AI focused, but I think it's more how payments or money movement interacts with AI. So you have, agentic commerce, which is a kind of a real hotspot and cool topic if you've been to any recent payment, payment conventions. And that's just getting an agent to act on behalf of, like a card holder or a customer. You give them an instruction, the agent will go off and do it. So if, I don't know, I'm a bit of a sneaker fan, so if a new sneaker drops at 3 a.m., it's not me, old school, in front of my laptop trying to get it. It's, maybe it's more, there are those type of examples, or it can act on my behalf in a different market, anything like that. So I think that, like, AI in our world, the real upside there is around how it sifts through all the data that travels with transactions. You just think about the gamut of transactions and money movement that happens just in Australia alone, let alone globally. And so using AI smarts to help generate insights that you otherwise wouldn't have been able to access, and all those things around, does it help, provide access, to a customer set that, a merchant or an insurer didn't think was previously possible, like all of those sorts of things. But I think we've only just scratched the surface of what AI can bring to the world of kind of commerce and money movement, and there's plenty more runway to travel.
Plenty more to come, isn't there?
Yeah,
we
so much.
We obviously focus a lot on distribution, and agents I think will become part of that world. But all the conversations I have with insurers, that the large challenge that they have is their current capability, their ability. They're struggling to get REST APIs, let alone kind of bring MCP in. And there's how do the agents even interact with their products?
Yeah.
And so I think it feels it's going to happen in kind of B2C, kind of e-com a little bit quicker than which maybe you can get access to a pair of sneakers a little easier than you can an insurer's policy system, which trying to make the products so I think I completely, because I agree with you, we obviously we want to play in this space too, which is how do we help insurers, like the agents, get exposure to those insurers products, and therefore being able to pay, etc., is an important part of that.
It also might be around, like, it doesn't necessarily have to be around the movement of the money, right? Like the actual funds flow, that's one thing, but it's all the other things that you can create around that money movement, which I think, AI, but also just, intelligent and innovative people can do the exact same. So like we mentioned, reconciliation, like, being able to automatically reconcile an over or an underpayment doesn't necessarily sound cool, but it saves everyone a truckload of time and money. And creates a really good customer experience. But that's not an agent that's doing that for you. Maybe over time it is, if you want to, drive down operational costs. Like, that's where that probably comes into play. But yeah, it's all the experiences that you can create around the money movement, I think, and that's where the opportunity is.
That's super interesting. I was on a bunch of calls last week. We're doing a bunch of work in the UK, and it was all with finance teams, all making sure, worrying about the reconciliation. It's when we're thinking about going through procurement processes with organisations, finance are an important part of the puzzle, and reconciliation is the number one thing.
Well, that gives the instant gratification to the customer, right? Like it's or the next best. Like that gratification doesn't mean like insurance premium bought. It's actually the next best action. Like the sooner, to Ed's point around direct debit, if it takes you 3 days to tell the customer what the next action is, like that's too late, right? In this day and age, and so. Like that's the thing that's really exciting, and that's kind of innovative, but maybe at a pace that an industry like insurance can get comfortable with.
Yeah, I think from my side, it was like Domino's did a real previous job. Everyone talked about Domino's because you can track the payment along, or like you could track the hey, my pizza's here, then there. So their customer service volumes went down completely because no one was like, oh, it's my pizza on its way. And then Uber kind of just came out and just completely destroyed that. It was just like, you don't even have to think about it. You just know that it's going to be there. I think that's in insurance and payments. I think that's where we need to get to. It's like, instead of worrying about AI agents like responding to kind of queries around stuff, if you can just remove that whole query altogether, because you have instant, hey, we've received your funds in 2 to 3 seconds, and it's like a tick, yep, received. Clients are, oh, amazing. How did you do that? And in my previous role, when I really started out straight out of university, 50% of our calls were literally, hey, have you received my money yet? Because the payment was going through, and it was based on the, as Dave mentioned, the BECS rails, and the funds didn't go through to the next business day. So, and then they came through in a batch file. So even though it had to have the amount to match up, had to have the reference to match up for the funds to get allocated automatically. And then when you talk to the reconciliations team and go back to your business case, number one thing they'll tell you is like, oh, we've got 95% matching. I was like, okay, so what happens to that 5%? Oh yeah, 95% of our complaints or client calls are to do with that 5% that don't match. So it's like everyone's like, oh yeah, we've automated it.
Yeah.
So it's like trying to solve that 5%, which is the critical one. If you can get 99.9 straight through, that's kind of what everyone wants.
Like the superannuation industry, Nigel's going through exactly the same upheaval, right? With PayTo super legislation or reforms coming in. It's slated for July 2026. It just means that superannuation, it's now paid quarterly, but will have to be paid at the same time as payroll. And so what you are seeing is an entire vertical going, and there are big penalties back to the employer around the failure to comply. And compliance can be, I've paid someone super contribution, but I don't have the details aren't correct. The employee's details aren't correct, but they're not correct because they didn't get collected and verified up front. So there are all these things, and the employer's like, oh my God, I have to change all. So there's a huge amount of inertia, but from a payments perspective, the volume of transactions is going to almost triple from like 200 million to north of 500 in a year. But the interesting part is that the time to remediate like unreconciled failed transactions is going from 20 days to 7. Right. So you're having 3 times 300% growth in the number of transactions and a 60% reduction in the amount of time that you've got to solve it. And so that's not an issue for the payment, right? Or the money movement. That's a massive issue around like what's the next, like like the data, like all of those sorts of things. And so that it kind of so superannuation is like specific to that. The PayTo supers are specific to superannuation. But I think, the ability to create great customer experiences, to optimize operational costs and commercial make it like commercial outcomes accretive for the insurer. They all sit around how you match the money movement with the data, and then like how you then trigger what to do after that.
So yeah, it's always baffled me actually whenever I go into my accounts and look at my accounting software, and you can see like pending in superannuation. Like, what do you mean pending? Like, how's that even a thing? How's that even? I've never understood, but now it's brought a little bit of clarity. So I appreciate it. And now we've been chatting for a little while, and I want to. It's been so great. I could literally talk all day, but I want to wrap with a little bit of, in terms of looking to the future. We've touched on it a bit today, and maybe the future is here today. But if we're having this conversation in 5 years' time, so it's just past 2030, BECS is gone. Can you give me a sense of what do you think the world's going to look like in payments? Is it going to be much of the same? Is it going to be very different? Maybe I'll get perspective from both of you on where we're going to be in payments in 5 years.
From my personal experience, I think it will be very similar to the checkout experience of a current e-commerce. So you'll have multiple different payment options. You won't just be stuck with one or two. The expectations of the consumer have drastically changed over the last 5 to 10 years. And, what are they going to be like in 5 years' time? People expect now. So they want immediate kind of processing and immediate resolutions. My own personal experience, I just purchased a house and had to get home insurance, and that was the most painful thing I've gone through. I spent pretty much, I'd say, equivalent to about 8 hours manually creating different forms for every single insurer to try and find, because I live in a fire zone, so some insurers just don't want to insure me, but they won't tell me that until I get right to the end of the quote. So it took, I reckon I'd say 6 to 8 hours worth of just manually typing. I kind of wish there was an AI that could be able to just do that for me. But the worst part was the one that I did want to go with. I got to the checkout and there was a payment error. And I was just like, oh my God. And every single time, because they were like $2,000 cheaper than everyone else, I was like going back for a week. But I had to type in manually my details. I just wish they had Apple Pay, Google Pay. So I wish, in 5 years' time, they'll probably have AI to automate that. But also, just having just what's now would be so much easier. That's my personal experience.
Love it. Love it, Ed. So, thank you. And how about you, Dave?
I think that, I think the adoption of MPP in Australia it'll be ubiquitous and prevalent. I think that's going to be the major shift. And that benefits everyone, right? So benefits me as someone who's purchasing something or procuring something. Benefits the insurer who's receiving or needs to pay out. The money movement is instant and transparent, and the experience for everyone is the same. And so that's where the MPP is on a journey. So there's some disparate experiences, dependent on, bank, dependent on, account, all those sorts of things. And so you'll get much more ubiquity, and it will be much highly penetrated, and we'll just start seeing all these use cases. The awesome thing of that though is all of I think where the real innovation, the excitement comes from is how each institution, or let's say for insurance, what other cool things do the insurers build off the back of that kind of infrastructure? I think that's where the true innovation will come from. So that's what I'm looking forward to seeing.
Love it. Look, Dave and Ed, thank you so much for your time. It's been really nice to have you both. Ed, it was great to meet you a couple of weeks ago at Intersect, and obviously we'll be cheering from the sidelines on Monoova and looking forward to seeing what we can do together over time. So look, thank you so much for your time today.
Thanks, Nigel.
Cheers, Nigel. Wonderful to be on here.
Awesome. Look, everybody at home, I really hope you enjoyed the episode as much as me, and hopefully shone a little light on the greyness of payments today. And so if you do want to watch the video version of this episode and see Dave, myself and It's Faces. Please jump on YouTube. You'll be able to see us there. And as always, if you want to hear more from industry leaders who are pushing the boundaries of insurance, please do check out our other episodes of our podcast series, Building Tomorrow's Insurer. So from Dave, myself, and Ed, thanks so much and